Hey, what's up, guys? So I want to explain what to look out for when you're thinking about using one QuickBooks subscription for multiple entities. And I wouldn't quite advise doing this. I think that there can be a lot of complications that come with it, so you really have to pay attention. But I do have a client that I'm about to onboard, and he really wants to keep everything in one subscription. He does real estate, so I think this does apply for a lot of real estate investors who are using multiple entities just for different properties that they're acquiring. So I'm just going to walk through what to look out for and what I have experienced personally. So if you do want to do this, you come into the account and settings and come into this advanced here, and you can set up your businesses by location. So you'll see this categories. If you're doing properties, make sure you have classes and turn on the warning, and you want to assign the classes to one to each row. And then you'll see this track locations and change it to this business label. So that's how you would initially get it set up. And then you can come right back into that gear icon, click on all lists, and you'll see this locations here. And then you'll set up whatever business you have. So we'll just do two of them. Say business A and business B. And then we'll come back into our list here, and let's turn on classes, or let's create our classes. So we'll say business A has two rentals, rental 1 and rental 2. And then we'll say business B has one rental. So say we're rental 3. Okay, and then we can set up two more, and I would suggest making a general class for each business. So let's do business A general, and business B general. This will help with reports to double check your work, make sure things are being categorized correctly to the correct business. So if we go to the bank transactions, we'll just say the checking account is for business A and this savings account is for business B. And I would suggest, if you're going to do this, separate checking accounts for each business and credit cards. At least that'll make it easier for you to track things. So what this does, when you come in the bank feed here, now you see this business and the classes. So every time you make anytime you categorize something, you always have to have the business in here. Otherwise, when you make the reports, if you forget to put in a business, it's not going to show up on your balance sheet or profit and loss correctly. And I'll show you the reports that you can make to figure out if you did forget to put in a business. One thing that you cannot use if you're doing this, let's say this MasterCard is for the business A checking account. If you're doing transfers or credit card payments, normally in QuickBooks, it would say like pair or credit card payment. It would want to match it to that credit card, but that's basically doing the same thing as a transfer. And doing transfers, you cannot put in a location. You can't put that business in, so that is not going to work. If you are making those payments, I would suggest putting in like a credit card transfer clearing account. So you would set this up, make it as another bank account, and then each time you make that payment, you would just put it to this transfer clearing account. That way you can put in your business, and then just have the general class. You would post that, and then you have to come into the other side, find that same transaction, and you would categorize it the same exact way. So you would do the credit card transfer clearing, put in that business in that general class, and that way it'll show up as a zero balance on your profit and loss, but you will get that location correct. So then it should just zero out. That's all you really need to know. If there's a bank or a credit card transfer clearing amount sitting on your report, then that just tells you that you didn't probably categorize it correctly on one of the sides, so you got to go back and correct that. So that's one thing that you have to watch out for. And if you do have like a savings account, let's say like this was for business A, you have a savings account, the same thing applies for transfers to that account. You have to make sure that you're categorizing it to some kind of clearing account or something like that, so that you can get the business in there. Okay, so let's look in the reports, and let's just go to the balance sheet. And we're just going to create a couple expenses just to show you what it looks like. We're going to do last year, so it's just a clean report. Last year. So you can see it's blank right now. So let's just create a couple expenses. So business A has this checking account. Say this is on the first. So each time you're in that bank feed, you got to put the business in. So this is business A. And whatever the expense was. And we'll say this is for rental 1. So now this is the total balance sheet. We're going to display it by business. Okay, so now we see business A. All right, let's make another expense for business B. So the savings account we know is for business B. We want to make sure it's in the correct business, whatever expense it may be. And we know that rental 3 is for business B. So now our balance sheet is going to show both businesses. We have our bank accounts that are correct and the balance on it. So if we go, so let's just save this report, and this is the balance sheet by business. Now let's say that you forgot to put in a business on an expense. So you go into your bank feed. You're in business A. Whoops. And you make an expense for another 100 here. And this is for rental 2. Okay, and you forgot to put in the business. So we know rental 2 is for business A. It's coming out of the checking account that is for business A. But now the balance sheet is showing not specified. So anytime you come into your reports, if there's a not specified, that shows you that you forgot to put in a business for it. So now you can come in here. At least you can, if you have separate accounts, it came out of that checking, at least you know that's for business A. So that's why I would suggest separating them out. It can at least help you understand what is happening, which business it was supposed to go to, and then you can make the correct changes. So this is for rental 2. We know that's business A, so we'll save that. So let's say that now you make a expense, but you're in your business A and you accidentally put it to the wrong class. So that's even harder to track because that's a very easy mistake to make. And the way you can figure out how to see that is by reports in the profit and loss. So let's just create the expense first. And we'll just do it from the business A again. And it's going to rental 3. So we know that's for business B. But it's going from, it was probably supposed to be like rental 2, but we accidentally just put it to rental 3. Okay, so we're still in the balance sheet. So I just want to show you what the balance sheet looks like, because we can come in here and we're like, okay, well, everything looks good. Doesn't look like we made any mistakes. There's no non-specified. That's all good. So let's go and look at the profit and loss. And we could do a profit and loss by class. And we'll get to last year here. All right, so now we have the 3 rentals. So we're not separated by business yet. So if we display, let's do the filter. We're going to go by business. We want business A. Okay, so we know that business A does not own rental 3. So another filter that you can add here is we want to have business A, and then we're going to use the classes that we know does not apply to business A. So business B general, and then rental 3 is not part of that business. So we can save this report, because if anything pops in here, we know that it's wrong. We want it to always be 0. So you could save it as like a profit and loss, maybe like a reconciliation. Maybe business A, and then just do another one for business B. So you would do the same thing for your second entity. So you could do business B. Okay, and we know that it should be only rental 3. And then we would set this up as the business A classes. So it'd be rental 1, rental 2, and then the business A general. So this should show 0. So this would be right. If you came in here and you save this report as the reconciliation for business B, this is one way to check to make sure all the classes are correct. So let's go back to the custom report. We see this is set up, so let's go back into the business A. And we'll see that this rental is in here. We know that's not right, so we can easily just come back in here and change it. So those are 2 reports that you can set up. You have your balance sheet by business. That way, if it's not specified, you know that it is missing a business. We know that this is business A. So we know the class is probably wrong, so we'll change it to rental 1. And then our report should be good. It should be at 0. Now the other thing that you might be doing is doing expenses from one business for the other. So if that's the case, let's create an expense where you're paying from business A's checking and you actually are paying for business B's rental. Okay, so this is where when you're making these expenses, when you're categorizing it, you want to tell the truth. Whatever is actually happening, you want to set it up that way. So it is coming from this checking account. It is business A, but you know that you're paying for an expense for this rental for business B. So you're going to categorize it as such. So you can come in here maybe once a month, or even if you wanted to wait till the end of the year, that's up to you. But what you'll see on the balance sheet is now that business A's checking is paying for business B expenses, you'll see business B will have like a negative balance for this checking account. And we know that this checking account is only for business A. So what you'll do, maybe at the end of the month, you could say, all right, this amount needs to get transferred to this checking in business A. And what you'll do is a journal entry. So business B will have, so we'll do the checking account for business A. We know that that amount needs to come down because we're actually spending from that account. So when the asset goes down, you credit it for that $100 for business A, and we're going to do that general and then you'll set up an intercompany equity account. So we'll go down to equity. We'll save that. And so we're going to debit that intercompany for business A. And then we'll do the same thing. So that same checking account needs to go up on business B. So we're going to debit it. We got the business B general class. And then we'll use that intercompany equity again to credit it. So we want these to offset. Okay, so let's just see what this looks like, just to make sure that we did it correctly. So this amount now from business B got transferred over to the correct business because that checking account is for this business, and then you'll see the intercompany equity. And so we do this because we need to make sure that the assets and liabilities here for each business is correct. So let's just say that you wanted to transfer that amount over and you don't use that intercompany equity with the location on it. You're going to see that the balance sheet is going to be off. And this is the other pitfall of using multiple entities in one subscription, because you can actually mess up the balance sheet where assets do not equal liabilities plus equity. So let's just delete this intercompany equity for a second. So let's just say because you're trying to transfer, like, okay, business A checking account needs to go down, and the checking for business B for that account needs to go up so that it zeroes out. So we're going to save that. Refresh this. So you'll see the transfer still, but then you'll notice that the balance sheet is off by business. So this is one thing that QuickBooks is designed to help you with, so you don't make this mistake. But because we're doing multiple entities and QuickBooks is not designed for that, then it's not going to catch it for you. So our balance sheet, by total, they still equal out. We had the 500 and the 500. But if you're doing it by business, you'll see the assets is at 400, negative 400, and the liabilities and equities at negative 300. So if you ever send this to your CPA, they're going to be wondering what is going on, because that's impossible in QuickBooks. So they're not going to actually understand like how that happened. So you have to be careful. You have to make sure that the companies are matching for the assets and the liabilities and equity. So that part can be confusing, but just be aware of it. And when you're making these transfers, just make sure that your balance sheet is correct for each business. So I think that covers pretty much everything. If you guys ever have questions, if you're thinking about doing this, or if you're trying to hire a bookkeeper to do this for you, feel free to reach out. I'm going to leave my Facebook link and other information that I have. So if you ever want to contact me, or if you just want to leave a comment, I'd be happy to help you guys out. But anyways, if you come across this, just be aware of the pitfalls of trying to do everything in one subscription, because it can get quite messy, and there's certain features in QuickBooks that you just cannot use. And I know there's a lot of videos that I've seen that explain that you can set up locations for different entities, but you just have to pay attention to certain aspects. Otherwise, things will not be correct, and you'll be wondering how to fix it. So, anyways, thank you guys for watching, and I'll see you on the next video.